It's gonna be
May.
You guys, I can't tell if it's somewhere between a cow and a lamb. When you
May.
Oh man, we're entertaining ourselves.
We're doing the wit.
That's the take. As good as we're getting.
Something bad's happening in Oz? What?
Oh man. Okay, for those of you that don't know, every year it's a meme that Justin Timberlake, and he says it's going to be me, is what he says as lyrics in the song, but it comes out as it's going to be May, and that's what we were doing. In case you wondered. All right, so moving right along.
You know when you have to explain the joke, that makes it.
I know,
Okay.
but it's anyway. They might not even get that part based off of what we just did. Are you ready?
You're canceled.
That's right. It's okay. My streak continues.
I'm going to call Trump personally and say, ask him to fire you.
You're fired.
Oh yeah, I guess we'll have to talk about him again this week, huh? All right, let's get started here. I know we got a tight window, about 45 minutes max. So let's get moving. My guests are Daniel Hopwood. He's top right corner, ex-institutional wealth manager. And then in the bottom left, we have the banker, J.P. Morgan, Josh Morgan. What's the P stand for?
Paul,
there we go. And then we've got, of course, the head guy, the after
Max
what we
Hedrum?
talked about. That's terrible. No. All right. So
Nope.
I remember that. Yes.
Nope.
I'm old enough. You need an all black background. That's right. Never gonna give you up. Oh, that's a whole different thing. All right. So anyway, we got Royce Wells. He is the CEO founder. He's the one that wrote the code. He wrote the code, bro.
And broke it.
He is the wrote the code, bro. Yeah. Right. And he's good at leaving doors open too. I see it. Mine's cracked still. All right. So anyway, let's go ahead and give the disclosures here. One, we're not funny. Oh, no, that's not it. All right. Disclosures. We're not financial advisors, and this is not financial advice. This information provided is surely for educational and entertainment purposes only. Please always consult an investment professional before making any final decisions, financial decisions, which would be final decisions. All right. I try to say that quickly. You remember the FedEx guy? He talked really fast. I'm old enough for that.
I think you're thinking Micro Machines.
FedEx guy did too. Micro Machines.
We should also
Saturday cartoon.
We should also disclose that we're not musicians either.
That's true. You should. But I do try to be. Both of us. Royce and I both try to be.
Whoa.
Royce is, I guess, the exception, but
all right.
There we go. Like, whoa. All right. That's TikTok, people. All right. Here we go. Markets. See, Daniel knew what I was talking about. Like, whoa. All right. Anyway.
It's my anxiety.
I'm too old. I'm not supposed to know that, but I do. All right. So let's talk about the markets. It's funny because it didn't change as much this time, Daniel, as when you wrote it. But there are, some changes. Yeah. So we had gold did pop above, right? It is funny how these algos work. It hit 33.33 and then it fell down. And then it ended up about 3,200 at close. Dixie or DXY did move up after what you wrote to 99.67. And that's a good temperature, by the way, too. We're talking medical stuff. See, we do medical advice here, too. That's the only advice we give. No, we don't. All right. So basically there was Bitcoin was up to 94.6, which is not a good temperature, but 94.6, it might still be hanging around there. GDP.
Oh, no, 94.6. You're right.
Oh, it stayed? Okay. So that was as it stayed the same for an hour.
It came back down.
Yeah. Okay. We talk about GDP was the big thing today. The economic report came out saying that we are contracting. We actually went negative 0.3. If they're even being truthful, let's move on. The prediction was plus 0.2, and it ended up being it's a 0.5 difference. And even with the pre-purchase before tariffs, I mean, because we'll talk about it a little bit later. I think you've got it in one of your spots there about the people buying ahead of when the tariffs are going to take effect. But even, yes, everybody's talking about the next 2 months, the next two reports for a lot of stuff is going to be bad. So we might be doing what you'll talk about later about everything rising up, and then we hit the floor.
Why do
Not
we have
dancing,
to
though.
floor? We like up
I
and
know.
to the right.
Yeah.
It was a lot
I
more
will
fun
say it
back
for
then.
you. You have to come down before you can go back up higher. I'll say that for you. All right.
Yeah,
So
bring inflation back. Make inflation great again.
Make inflation. You know what? I'd vote for that man. I'd vote for that man. Hopwood 2028.
so with that, what you're saying about
I
stockpiling,
said Hopwood Morgan 2028. Come on.
It's got a
I'm
nice
trying,
run.
guys. I really am. I'm trying
Let's
to move
do
forward
this.
quickly. All right, the pre-cap is what I like to call this, I guess. But the stockpiling, yes, there is truth to that, Royce. I mean, people have been talking about it, but there was a 41.3% surge in imports ahead of the tariffs. And that's probably still happening. So that also has helped some numbers, right? I mean, it's kind of a false numbers that are out there because people just stockpiled. It's not the real economy. It's just somebody hurrying up.
No, it's still
So-
those sales still happen.
Oh, it counts. I'm not saying that, but it's just not, hey, look at the economy. It's going great. No, people are stockpiling. All right. So, and then the other thing that came out was private employers hired less than half of what was predicted. So that's the biggie, because that's what they've been talking about as far as where the Fed comes. That's what they're focusing on is employment, because it's the one thing they are supposed to focus on. And in private employers, I guess such as yourself, Royce,
Exactly.
It was
So I
only
needed
half.
to hire half as many people as I just recently hired. All right.
All
Who's
right.
getting the hammer? I'll let you decide.
A side note, see how much money I can make off of this. A side note is that we're growing here at Arbitrage Trade, so we are not part of that group.
Nope.
We're actually growing, so that's good. And then consumer confidence and even now corporate confidence, they're admitting, is getting fearful of this recession. So anything you want to add in there, Daniel, from just the overall market? Then we'll move on to the fun facts.
No, I mean, the overall market is, it's kind of slowly chipping up. It's been a long grind. I mean, S&P just crossed its big downward trend line, and we'll get into some of the things later. But, there's, in my opinion, kind of mixed signals in the market of if it's ready to, I don't want to say rip, because I don't think it's going to rip, but, we'll say continue, trickling up, or if this is kind of like a bear market trap to,
happen.
leave. What? That doesn't happen?
That doesn't happen. Market
Yeah,
only goes up and to the right. Only up and to the right.
Well, sure. When we look at this episode in 2 years, I agree with you. But
Yeah, exactly. Exactly.
the next 2 months may not be that.
Hey, I've got
we'll
facts
see.
on that later too, by the way.
Okay.
I got facts on that. I'm bringing facts too. Daniel and I both are bringing facts. Even the APE is this week. Anything from you two guys? We'll throw in before we move on to fun and concerning facts.
Well, I've been watching lots of real estate recently.
Yes,
commercial
you
real
have.
estate in particular.
Yes.
And there is a lot of scary out there. I was talking to Daniel right before this, and more than half of the hotels in Las Vegas are up for sale.
I believe it.
Think about that.
I believe it.
So
But we've been saying CRE is a problem.
Recession, or they just need fresh investors to help get them out of the murky times. It's starting to look quite nasty out there.
Yes, but I know you guys, anybody that watches the show for the last year or so, we've been talking about this CRE, Black Swan, if you want to call it that. But I mean, it started over in China, or at least it was first admitted in China, and now you're seeing it here too. So yeah, CRE is going to be great though for people that have a lot of cash. Warren Buffett. I guess it's going to be Las Vegas Buffett, where you can get your buffets. I don't know, but he probably can put a lot of money in buying stuff.
If you have $4 to $5 billion, you can have the Bellagio. Go for it.
There you go. And yes, fountains and all. What about you, Josh? Anything you want to throw in real quick before we move on?
Oh no, I was gonna say it's not really just commercial. I mean,
I know.
Residential's hurting
yes.
too, because you got.
I was just surprised to see so many commercial out there.
Yeah, I mean, but residential just last month, I think they hit one of the highest levels of inventory we've seen in 10 to 20 years, and seeing new house sales slow down by like 5.5 or 5.7%, I think, and then you've got real estate, or you got mortgage interest rate. It has jumped to 7+, and when you add all of those factors together, you're going to see that continuation of real estate cooling that we've been seeing. And so it's just
the people with money are buying new.
Are building.
Because the incentives. It's the incentive. That's what I'm talking about.
You're not seeing a lot of new builds either, though. You're just not seeing a lot of new home sales, period, regardless of whether it's existing sales or new construction.
And yet the average price keeps going up. I mean, the math is not math
for
a few years.
It doesn't. Every market other than some up in up north have pretty much started cooling by a pretty significant percentage.
Okay. See that. I forget what part of the month that comes out. It'll be interesting to see that for sure. All right, let's move on to Fun and Concerning Facts by Daniel. This is, I guess we should have Josh start off, since you mentioned JP Morgan's trading desk here, saying that we're tactically bullish now, which is kind of what Royce was saying, honestly. And that tech earnings and trade deals. I mean, that's kind of what it's all about, right? The tech earnings, how bad will they be? A lot of them are not. And this is this nasty little poop head trick they have now, is they don't forward guidance anymore. They don't. It's like, I don't want to tell the truth. I'm just not going to forward guidance. I'm going to take my ball and go back home. I'm not going to have that be fodder for people to sell stocks, because they don't like what we would say forward guidance, if we even tell the truth. These corporate execs,
they always tell the truth. They always give you the shirt off their back.
These which have these in the same bed accounting companies. Yeah, go ahead. What were you saying, Josh? I'm sorry.
Oh, I was just saying yes, and they're always looking out for the little guy's best interest.
Absolutely.
That is absolutely it.
I can't sleep at night if I don't help.
Bigger banks, bigger hearts.
I mean, I get Christmas, Easter cards. I get all of that from them. They love me. This little man here. All right.
From Larry Fink himself.
Oh, yeah. I sent I'm so sorry for your loss to Klaus Schwab when he had to step down from the World Economic Forum. And they'll be looking at him criminally right now. It's like, okay. Right? Yeah, right. All right, so let me get back into this. Warren Buffett owns 5% of all Treasury bills. What is that about?
Why not?
Talking about cash. Yeah, so it's just a temporary spot before he starts buying up the country. What say you, Daniel?
Yeah, I mean, obviously, did Warren Buffett miss kind of the whole tech boom? Yeah, but he's still one of the greatest kind of, investors of all time. And the fact that he owns more Treasury bills than the Fed is pretty crazy. Now, I think people read into it maybe a little too much, just because I've heard him talk multiple times, one of the reasons they were stockpiling cash is for them to deploy anything, it's in the billions of dollars, right? And so when it comes to them either buying a company or investing, it's they have to find pretty big companies that they think are going to make meaningful returns. And when the S&P was trading at 24 times earnings, and it trades at an average of 16, and you're Warren Buffett and you're a value investor, not a lot of value in the market, right? So you park your money in treasuries, you get your 4% or whatever, and you wait until maybe you find something. Also been speculation that Charlie Munger died last year. Warren Buffett's getting a little older. He doesn't want to hand off a bunch of positions to the next guy that comes in. So, but it is, it's if Warren Buffett's holding that much cash, it's something to think about. And he's been doing it since the end of last year, which, kind of, something that to add on, you talked about JP Morgan said they've turned tactically bullish on equities. But the part that you didn't say is that they also emphasize the momentum could fade within weeks. Right.
So they're all saying.
They're like, yeah, it's bouncing right now and we're trading it, but we don't see it continuing. Just to add to that, one of the other facts was that wealthy consumers are still spending, but low income shoppers are starting to pull back. And there's kind of if you look at the market, it's a forward indicator of how things are, right? And did we price in a recession in a matter of 2 months of trading?
Potentially.
Still no.
Oh, he is now gone. There
I'm back.
He's back.
I'm back.
He's back.
Sorry. And so it's have we priced in that forward recession yet? And I think there's kind of a lot of things indicating not, right?
Yeah.
Yep, I agree. And I think we'll talk about that later. We actually have a point later on that. Josh, anything about this specifically? Warren Buffett and a lot of money?
Well, yeah, actually, about Buffett specifically, I would actually think it would be kind of the opposite. Rather than him wanting to leave whoever takes the reins a bunch of cash, I would think it would be more of the opposite. He'd want to kind of do his typical, value investing, set a nice, pretty portfolio, and then just have the person that comes behind him just kind of, he can ride off into the sunset, do whatever he wants. And then the person behind him really isn't going to have to manage a whole lot and isn't going to have to make a whole bunch of decisions because, Buffett's obviously the best at what he does. So he would want to kind of package up something nice and pretty and then hand it off, him go do it, and then not have to worry about what is this guy behind me going to do? Like I've packaged everything up for you and handed you this perfect situation. Just don't screw it up. And then,
never mind.
Berkshire Hathaway is going to be set for, the next 10 to 20 years because at whatever point Buffett does decide to start buying, then we're really going to start to think that, okay, there's the bottom.
Yep. I got to talk about that too. One of our last points about the bottoms. We're talking about stocks. So we go to the fact that Scott Bessent. I don't know which way still to say it, but that guy, because I've heard the people on TV say it both ways. He said, and this is so patriotic, guys. He said a July 4th goal to pass President Trump's multi-trillion-dollar tax cut package. Because these polls that are out there, I mean, you know how much I trust those. These polls that are out there are saying that they don't like his handling of the economy. And then you had the credit card issuer thing, Daniel. Before we move on, trying to go quicker for you, Royce. I know you gotta.
Oh no, you're fine. You're fine.
Hey, busy. We're busy here at Arbitrage. Anything about that, Daniel, with the credit issuers?
No, I mean, I already.
The fact that the wealthy's keeping us afloat.
Yeah. I mean, it's the wealthy consumers are still spending, and the lower income shoppers are still not spending. Just this made me think of another point of a lot of the stuff I was reading is that essentially all the analysts were banking on the Mag 7 to have good earnings, and nobody else. And if, I was talking to Royce about this earlier, if you look at Microsoft after hours, when they beat earnings by nothing crazy, they were up 5%. So, you saw the market have a little rally at close. And, it kind of begs the question of how much longer can the Mag 7 carry the entire market before, it's just such a big disallocation between those guys and the rest. And while they're not tariff sensitive, they still are affected by actual dollars into the business. And if the world isn't spending, and I do say the world because I think it's the world in this case, they'll feel the impact too. I mean, it's not in Q1, but it might be Q2, Q3 earnings. So,
Somebody said
and then
something about
Darin, I'm sure in Q3 they will issue guidance that things will be
I think
up.
Darin's trying to toot his horn again, guys.
Yeah, not only that, but I mean, because it's just like the whole conspiracy hat theory thing. It's eventually a graduation hat. I've been saying also about this wealth gap thing, right? I've been saying it for a year. You guys probably getting tired of me talking about how the wealthy has been. I mean, we could rewind these after the bells in the past, and it's because it's on the reports that they don't show you on TV. Again, Fred reports. People get into it. Fred reports. You will see what's actually happening.
Did y'all hear that?
Yes, I do feel like one. Yes. Anyway, it's just frustrating. I mean, because it's the media just tries to hide it. That's because they're paid to hide it. And then, all right. Y'all getting me worked up again. All right. So
we would never.
No. Just blood pressure in my veins and stuff like that. All right. Let's move on because we actually still have quite a bit to cover here. We got Bitcoin. Is it the new gold hedge? I don't know. I think we're at a top, aren't we? I mean, can we go to 3,500? What do we? It looks like there's not as much of a give and take on that anymore. Looks like they're two different entities now. So what's going on there? Daniel, then Josh. And then
I see Royce want to say something.
I'm trying to think that 3,500, and I'm like, what's 3,500?
No, I mean gold. Eventually, there was talk about it hitting 3,500. Yeah.
I was thinking like Bitcoin. I'm like, Bitcoin's like 95,000.
Right. Yes.
That was confusion. That was confusion.
Yes, Confucius say. But okay, so there was talk about 3,500, and so that didn't happen. But I mean, it kept moving in that general direction. And now I just think they're disjointed. I don't think they're together anymore. What's your thought there, Daniel, and then Josh?
Yeah, so I mean, that was kind of, the whole thing, kind of since the end of last week is that gold had, I don't want to call it a blow off top, but a little bit of a top. It kind of peaked out and traded back down, where Bitcoin, you could argue is really kind of started its rally. We'll see how far it actually goes. But, in this month, or I guess last month for me, Bitcoin was up 22% and the market wasn't even up 1%. And investors poured just under $1 billion into Bitcoin ETFs, right? So there's a pretty big flow there, and a lot of that happened on the same day that Trump was threatening to oust Powell. And so I think, there's speculation that a lot of the gold rally is actually China buying the gold because they want a way to get off the U.S. dollar, and no one's just going to go start just buying the Chinese currency, right? There's the idea that the world is going to go get behind another currency that's backed by nothing is just kind of not really there, and I think you're seeing. It's largely probably retail and maybe, some different institutions go, all right, well, gold's there, but, a lot of people view Bitcoin as digital gold. So I'm going to go do that as a similar hedge. And the interesting thing is that it's, not kind of trading in tandem with gold, at least at this very moment. So it'll be interesting to see if it, does kind of start to define itself, or if it's, just a small disallocation and continues up. A lot of people are showing, they're kind of overlaying the 10-week looking out global M2 money supply chart over Bitcoin. And if you do that, it looks like, there's a nice rally coming for Bitcoin. So we'll see.
I noticed silver was also moving up at the same time, but I didn't check it today. I know it was yesterday or the day before. It was also getting a nice little run. Josh, go ahead. Anything to add?
Well, I just kind of want to piggyback on what he was saying about, not so much like what's happening, but the why. And, one of the things that Daniel said was that Bitcoin is referred to as digital gold. And it's the why is really simple: supply and demand. Like if you think about why gold always is kind of the hedge for an investor, like why it's kind of their safe space, it's because you only get, I want to say like 2% of the world's gold supply is mined every year. And so the supply itself rarely increases. So it's really, and it's a tangible asset. That's not something that Bitcoin can do. But the thing that Bitcoin is, and Royce, correct me if I'm wrong, but I think that Bitcoin, if you look at gold, the supply will double in the next, 35, 40 years or whatever. Bitcoin, I think there's only like 6% left to be mined total.
Yes.
And then it's done. Period.
But it's going to go, I think, until 2140, like 2140. So that means we still have like 115 years before it's completely exhausted.
But you're still, even in that period, it's still, the supply of Bitcoin is only going to increase by like 6%.
Yes.
The supply of gold could increase exponentially until it doesn't run out, and nobody actually knows when that is. I mean, I saw a thing about there's some asteroid out there in the world that's worth like $700 quintillion worth of gold. So who knows if the supply of gold magically increases? But again, the supply of Bitcoin is extremely finite. Like once it's done, it's done, and then it's just a matter of, is the demand still there? And I just thought that was kind of one thing that I don't think a lot of people truly understand, why everybody is referring to Bitcoin as the digital gold, because that it is extremely finite. So you have to just go back to basic supply and demand.
Absolutely.
Anything, Royce?
Yeah, absolutely. So to build on top of that, what I think is going on, and I could be completely wrong, I think all the countries and central banks are stockpiling gold for a potential conversion to a digital currency. And slowly behind the scenes, banks are adopting XRP, which is one of the only centralized cryptocurrencies. All of the others are decentralized, which means basically no one holds all of them. With XRP basically also coming out with an ETF and a stable dollar later this year, there's a good chance that basically some of that gold will be converted into the XRP market, just so that way the central banks can continue doing business and basically maybe even leverage more XRP as it basically stands up. I read a couple articles talking about that. Bank of America is talking about digitizing or tokenizing close to $30 trillion worth of real world assets behind Ripple. So that's a lot between now and 2030. So I think they're literally buying the gold now, so that way people don't see them switching in the future. Buy it up now and then slowly deflate it. And when it looks like the price is going down, they're pouring it into another currency, whether it's a digital dollar or a different cryptocurrency. I think this is a very nice move by the central banks to basically a sleight of hand, so you don't see what's coming.
Sleight of hand, central banks, no way. There is an update to that. They were going to decide, SEC was going to decide today about approving those ETFs, and they decided, like as they notoriously do, that they're not ready to do that yet. They're going to decide about it later. So, but what you said,
securities out of commodities. I mean, come on.
Yeah, well, yeah. What you said though is true. I mean, it's probably going to happen later this year. I think that all depends on how everything else goes. I think probably, it's not one. It's not the same as everything else that's going on. They'll do it if it makes sense. I guess they'll wait until that point to say, it's okay.
Yeah, I've even seen the central banks even monetize and collateralize against Ripple. So I mean, they're giving 25 to 50 cents on the dollar against real world assets and giving loans out against that particular cryptocurrency. So there's a lot that's going on under the covers that a lot of people just don't know about.
Yes, that's what I'm saying. It's that what really matters is what you don't hear, not what you do hear. Absolutely. You have to be able to do your own Fred report and stuff like that, deep dives, because you just can't take it.
A DH report.
There you go. You can call it that. That's fine.
And that's for Daniel Hopwood, not you. No.
Or it could be Darius. I mean, we got 3 DHs, right? All right, let's move on to one we've talked about over and over, and I guess we will until something's decided, which is probably after June. We got what's going on with tariffs. And go ahead, Daniel.
No, they said July 4th.
Yeah.
Didn't Besson say July 4th?
But remember, they're notorious for pushing things later. But go ahead. What you got there, Daniel?
Yeah. So
tariffs.
The impacts have, they're starting and they're projected to be bad. So I mean, Meta has lost or is predicted to lose $7 billion in advertising revenue. Not all of it is from Temu and Shein, but I believe the number was last year they made up, or I think China as a whole made up 11% of Facebook's ad revenue, which is, a pretty big chunk when you're talking about billions of dollars in ad revenue. And China has actually started to look at considering suspending some of the tariffs because it started to impact their already not great economy. And, this is at least reporting from Bloomberg on the, American side, right? Who knows how much they will actually hold out. It's a big game of we say we're talking to them and they don't say that they're talking to us, but we also heard that in 2018 before a deal was done.
Right.
But net companies are now adding tariff fees to their products. We're seeing that sea freight shipments from China to the U.S. are plummeting by 65%. I believe starting next week or in 2 weeks, the Port of Los Angeles receives most of the China shipments, and they're expecting like a third as many ships as they normally do, which is like worse than COVID, apparently, which is an insane fact. Like the world is open, but we're having less ships coming than during COVID. So, people are going crazy predicting like empty shelves and things like that. And so, it just kind of begs the question of like, okay, all these things say they're about to happen. Like, are we really about to see the impacts? Because, I'm in Singapore, right? So it doesn't really affect me too much. Like, does it seem like there's doom and gloom about to happen? Like when you couldn't buy toilet paper during COVID?
Not yet.
Well, you're the only thing it impacts right now is your connection. We heard you. We saw you go in and out.
Oh no!
The old tariff thing again. Don't say that too loud. They're listening. Remember. I do have a little funny thing to add to that, and that is that it came out today or yesterday that President Trump was jumping all over Amazon because they were threatening, or they actually said they were going to do it and then pulled back on it. I don't know which one it is. We'll never know the truth anyway. But they were going to list, when you buy something, a tariff fee. And it's a very political thing to do because, in the past,
pulled back on that.
Yeah, they either pulled back on it or they never were going to do it, and it was made up. Who knows anymore? You know how I am. But they pulled back on it. They're not going to do it. And then Trump ends up saying that Bezos was a very nice man. I can't do an impression of him, but he finally said he's a very nice man.
Thank goodness.
Because that's what Trump, that must be part of it. I haven't read the book like I guess you have, Daniel, but somewhere in it, it must say beat somebody up and then at the very end say they're a very nice person. It must be part of the art of the deal. I don't know.
That's dating 101. Come on.
Yeah.
Be mean,
got a point
then
there.
be nice. Be mean,
You got
then
a
be
point.
nice. Come on.
You gotta break them down to build them up.
Anything for you guys to add? Got about 10 minutes left here. We can move on. All right, cool. Let's talk about a couple of things. We've got all these numbers that did come out. If you want to run over those real quick, Daniel, these numbers that I think you already touched on a few of these, like the home sales. But go ahead and just do a quick recap so everybody can hear it.
Yeah, so earnings have been coming in better than expected, but the future expected earnings are definitely coming down a bit. So that's obviously not great. But, currently, if you look at earnings, like the S&P, hold on, let me double check this.
While he's saying that, Friday there's a big jobs report coming out too, which is everybody's looking at or waiting for.
So currently, the S&P applies like 22 times multiple, and if you kind of like look at the numbers of where we were before, that would put us up about 6% from here. But if you look at what is the downside risk to like a reasonable multiple, I can't remember if the number was like 16 or 18 times. That's a 12% downside risk. And a lot of people say we're not even, this isn't even the market correcting. It's just a multiple like correction. And so, if you look at that 6% upside, 12% downside, it's definitely skewed towards more downside risk. With, and this could be the exact JP Morgan kind of thing. Why can't we rally 6% to then, drop down what would be another 18%?
That's right.
Which would only put us a little bit lower than the previous lows that we've already set recently. But if the news continues to not be good, I think we can super run the preceding downturn into what will then be later seen as recessionary numbers potentially.
Yeah, that's a good lead in to my comment on this, which was that, and I did some research, even this APE did, but I was curious about the multiples for recessions and even depressions, because after looking at those Fed reports and so many that were in that depression look, the price and earnings ratio was normally 12 to 14% during a recession. That's what they get down to normally. There was one crazy one, like during it was like 135%. It skewed the other way, but it takes about 5 to 8 months to find a floor, and that's what we keep talking about. Where's the bottom of this? Where's the bottom of this? Where are we going to bounce? And I think we bounced a couple of times now, that same general area. But the depression, the D word, it took 3 years to bottom out. So that's what we're playing with here. And to me, it's like, it's not if, it's just which one is going to happen. I could be wrong. The COVID one, on the other hand, only took a month to hit the bottom and bounce right back up. But that's because of all the money that was instilled into the economy. I have no doubt that's the reason that happened. Anything from you guys? Royce? Nope. We'll move right along then. That pretty much wraps up.
I'm
everything here.
Out of time too.
Yes, exactly. So, Royce, you were the winner. We'll be quick since you're the winner. We'll be quick. Let me pull up the scoreboard here. The scoreboard is Josh 5, Daniel 4, Royce 1, and then I'm sitting on the sideline with some popcorn.
Nothing burger.
You didn't have to say it. I just say that.
Darin's the referee.
I've got you. Thank you. I've got the popcorn and the Coke, and I'm just watching the show from an AMC theater. All right. So, Royce, you get to do two things here really quick. You've got the crayons, and then you also have what your pick is for this week. Okay,
sounds good. All right, let's go take a look at EXP. I think this is going to be my pick, and the range is about 200 to about 230. So I mean, each person gets about $7.50.
Yep.
If you guys want to go that route,
it's fine.
All right. So that's the one, and then I'm going to circle back and actually let's go take a look. While you're thinking about that and ruminating on that, let me do some crayons.
Okay.
All right. So the one I want to do crayons this week is a MTUM. It's a momentum ETF. And basically it's sitting at about 210. It's sitting quite nicely. Looks like it's about to get back. So basically it's a parabolic SAR. You see the red dots? Basically it looks like it's about to go into an uptrend. So it's been trending up since roughly the beginning of April, where we got our dollar signs letting us know that should have been the bottom. And it was so far. And basically it's currently trapped between our parabolic SAR, which is sitting at about 211, and our compass line, which is about sitting at 201. There is a high probability that basically it will continue this trajectory and may even wind up at about 250-ish, which means that's about a 20 or so % rise over the next 3 or so months if you're willing to take the ride. It looks beautiful. May as well just go play it. But make sure you ask your financial advisor first. That's all I got for that guy. So let's go back to EXP. And since this is mine, I'm going to actually let Darin go first. Because I'm not even
breaking tradition.
I'm not going to even do it. Not going to even do it.
Breaking tradition. So what were you saying about this one? No, I'm just kidding. I'm going
you
to
want hints too?
No. No, because then you guys will give me that whole charity thing. I don't want to hear that. I don't want to hear that. It's dropped below the RSI line. Let's see the plot.
So do your work, sir. Where do you want to pick?
I am. I'm trying to hurry here.
First pick. Let's see if he can win one.
Yeah, that's true. Is it at 226? Dang, and your channel is all below.
What was the range?
Yeah, what was the range?
230 all the way to 200.
Yeah. So your full channel is below the price
top
point.
Quadrant. If you want to pick the top quadrant, there's a good chance
that
it might stay here or it may fall.
I'm gonna go. Yeah, man, that's tough. I'm gonna take the 207.50 to 215.
Okay. All right. So I can't let two of those guys go. Go ahead, Daniel.
So what did Darin pick? 207 to
207.50 to 215.
Yep.
Let's see. I'll do just above Darin. Why not?
Okay.
215 to what is that?
222.50.
50. All right.
You're
All right. Go ahead, Josh.
Oh, I don't know. Like neither of those upper ranges are any good.
So you're gonna take the lower one at the very bottom?
No, I mean, sorry, the outside ranges. Like neither of the outside ranges are very good. I guess the odds of it going higher are better than going lower. So I don't even feel good about that one. So I'll take the upper range.
You were confident an hour ago.
Right?
I mean, I was in one of the other two ranges.
All right, so Royce, you get the bottoms.
Absolutely. Everything could not have played out better.
I knew you were going to say that. He's like Gru.
Like literally everyone landed where I thought you would land. So we're good.
Okay. All right. Well, let's wrap this puppy up. We got money to make. Royce has got people to talk to and people to help out. So we're gonna move on. And we will see you guys next week. There will be plenty of stuff to talk about, just like there is every single week right now. So Have a good weekend.
All right.
See ya.
DH reports. DH reports. DH reports.
Bye.
Bye.